This is Stephen Sargent, the new host of the Around the Coin podcast. One of my first episodes, I was lucky enough to get Brett King on the podcast. He's a futurist, he's a best-selling author, he's a globally recognized podcaster, and an award-winning speaker. We talk everything about fintech and payments. We get into crypto, international regulations, how he was able to be a first mover in the neobank revolution. We discuss technology, and we even grab some of his supporting thoughts from his best books. We talk about some of the key concepts around AI, around blockchain, and digital ID, and the place it will play in the future of Web3 technology. This is a must listen podcast. Great episode. Thank you so much, and let me know how you enjoyed it. Hey everyone, this is Stephen Sargent. First inaugural episode of me hosting the Around the Coin podcast. And I'm lucky enough to have, one of the people that mentored me virtually over the last decade, Brett. Brett, you're a futurist, you're everything fintech. I would love to hear, just give us a little bit about yourself.
Oh, great. Yeah, well, I'm an author in the space, obviously in fintech, but I'm generally regarded as a futurist. You can see I've got some books there that aren't banking or fintech and some that are. My claim to fame, I guess, is that book Augmented, ended up on President Xi's desk or his bookshelf during one of his national addresses. So the writing has taken me to some unusual places. I formed the first challenger bank in the world, mobile challenger bank in the world, Movin, back in 2010. That's now a banking as a service proposition today. I also, run the world's number one fintech podcast, Breaking Banks, and the number one futurist podcast called The Futurists. And generally, I'm working on a number of new books and number of ventures at any point in time. So glad to be here.
I appreciate you. I want to start off, I was listening at one of your early TED Talks where you talked about your daughter, who at the time was about 10 years old, and you'd asked her, how do she think she can make a cross-border payment? And I think she said something about, SMS or she just do it via email. Yeah. 10 years later, how would your daughter make a cross-border payment now?
So, I think, probably her answer's pretty much the same, which is, she would use a platform like PayPal or something like that. My daughter she's 22 now. When I told that story, she was 10, so a lot of time has passed. She lives in Rockhampton in Australia in central Queensland. So yeah, my kids grew up being very comfortable with electronic payments and so forth. My daughter, she was 16. We were living in the States at the time. And, I asked her whether she should think about getting her driver's license. And my daughter's response was, Dad, just give me an Uber account. So that's how these kids grow up. And this is how they think about the world,
And you talk a lot about modality in your talks. And, we've kind of gone from, being afraid to send our kids in anybody's car to now feeling comfortable sending them in strangers' cars every day. Did this surprise you? Did you think we would have had autonomous cars earlier? What were your thoughts of where we would be in 2023 going into 2024?
So in Augmented, I predicted that sometime around the end of this decade, because of autonomous vehicles, that there would be cities like London who would ban human drivers from city centers because human drivers would be deemed unsafe compared with autonomous vehicles. That may be a little bit optimistic. It may be, mid 2030s, but that's the trajectory we're on, and it's funny because, we if you look back at the 60s, there was some depiction of autonomous vehicles, but they sort of treated vehicles more like other forms of public transport in terms of its autonomy. Like you'd get on the highway and you'd hook up to a conveyor belt system or something, and it would be autonomous for that. But the bigger focus was on flying cars. And interestingly, we are seeing flying cars come to fruition today as well, but they're not how we envisaged. It's not a car that we've made flyable. It's now drones that you can sit in, right? So, we didn't necessarily see drone tech in the way it has. So that's something, when you look at science fiction is often a predictor of the future in this respect. But in respect to flying cars and the modality of that, we got it wrong. But, the point I've made in a number of my books is about this phenomenon we call technology adoption diffusion, which, we've seen with the adoption of OpenAI, ChatGPT rather recently and so forth. But, if you actually look at this from a cyclic perspective, what most people don't understand is the march towards technology adoption is absolutely relentless and it speeds up over time. And when people say, oh, I don't know if this technology is ever going to really change or make a difference, they're not looking at that contextual piece of that. They're assuming that the progress will be linear, or they're assuming that, we will choose not to use these technologies. And the reality is we just don't do that as a human race, and, like the number of industries, for example, over the last 300 years that have successfully defended the status quo of their industry against technology disruption, zero, right?
That was
So
actually going
it's
to be my next
it's the
point is that,
inevitability, right?
that was going to be my next point about autonomous cars. One of the things is that, if you don't pay your car note or make your car payment, the government can just turn off your car. And that was one of the, I think, challenges. What are your thoughts? Is that one of those things where we cry about privacy, but then we give over all of our information to save $10 at Bed Bath and Beyond?
Right.
What are your thoughts around that?
Well, I tend to take the Jack Ma view of privacy, which is, twofold, is that I don't think privacy is that big a deal, not in the way that we think about it today. And I don't think our kids are concerned about privacy. So I just think the privacy issue is going to become a non-issue in some respect. The issue will be whether or not the access to your data is invasive or it's beneficial. And so this is really what we'll have to grapple with the personal AI piece, but it's also the solution to that, which is when you have a personal AI that can basically act as a gateway for these deals and offers and so forth. The personal AI can obviously filter those. It can set the parameters of those. It can determine which data to share in real time. So there's some interesting concepts emerging around that, such as data wallets, that would control the release of your data under smart contract scenarios and things like that. Drumwave D-Wallet is one of those. So I do think there are mechanisms to ensure that you get value for your data, and the data you want to keep private, you'll have some control over. But there is a misunderstanding of that to some extent, in that the data that exists in the world today, things like your mother's maiden name, your date of birth, your address, if you're in the States, your social security number, you can never make this data private again. That horse is bolted, You can never make that data securable ever again, which is why we need to move to things like biometric identity systems.
I love it. I love it. You started, as you said, you went viral, I would say, with your Banks 2.0 book, and just talking about the user experience at banks and pretty much how fintechs and open banking would pretty much eat the bank's lunch over time. What have you noticed? Now we've seen decades of banks probably not changing much from your initial talks. Have you seen anything? I know you spend a lot of time in Asia. Are you seeing things out there that just is not transferring over here in North America, where banks seem very stagnant, behind the times, and just getting people to use ATM seems like a big step forward for that?
This is the thing, is if you look at this on a global basis, because if you're sitting here in the US, there is some change, it's gradual change, but it's not significant. But if you look on a global basis, then the world has already changed in terms of what banking is. More people use a mobile wallet for daily banking, everyday banking today, than they use a bank debit card or credit card. That's a massive change in a very short period of time. When we talk about financial inclusion globally, the mobile phone has done more to create financial inclusion than bank branches ever did. You look at disruption. If we look at neobanks and challenger banks, the like of Nubank in LATAM, the UK challengers, Monzo just did a deal this week, for funding with Google. The Revolut, obviously N26 in the German market. WeBank in Shenzhen, 400 million customers in 8 years. I mean, the reality is all of the fastest growing financial institutions in the world today are digital only businesses, pure play digital businesses. And they are taking market share from traditional banks. So in the UK, we know that at least the big four banks have lost at least 23% market share in the last 10 years because of the neos. So you might say it doesn't look like anything's happening. The reality is today, some of the biggest banks in the world are digital pure plays. Wallets are now more of a bank account than bank accounts are. The very definition of what it means to be a bank has fundamentally changed. And what we expect from the utility of a bank in a real-time world has obviously changed because of the app architecture is going to that change is going to accelerate. So if you're thinking, you're sitting in North America thinking it's business as usual, then get ready for a shock, because what's happening in the rest of the world will definitely happen in the United States, despite all the protectionism and the lobbying of industry here. It's inevitable, just like the internet disruption was.
Your book kind of set out the premise of what would happen. Do you think this would have been accelerated if the banks haven't been bailed out multiple times in the last, I would say, 15, 18 years? We saw recently with like SVB Bank. We saw back in 2008, the massive bailout of some of these banks. Would your hypothesis already have been realized had there not been government intervention?
Well, in the States, the biggest reason why we haven't seen the level of disruption we've seen in markets like Europe and Latin America or Asia, and pretty much everywhere else in the world, is that the US is the only G20 country that doesn't have a fintech charter or license for digital banks. The reason for this is a little complicated, but it's because in the US, if you're a bank today, you have to comply with a law that's called the CRA, or the Community Reinvestment Act, which was established in 77. And that requires banks who operate branches in cities and towns where they're the last branch, where they have to maintain that branch presence rather than, leave the citizens or inhabitants of that city or town without financial representation or access to financial services. Because in 1977, we thought that financial inclusion was delivered through the branch. Now, if you have a digital pure play that doesn't have branches, they don't have that cost. So the argument from the industry when trying to prevent the fintech charter has been it creates an unlevel playing field, that these digital pure plays don't have the legal responsibility under the CRA to deliver, services through branches. But that's a 20th century or 19th century or 14th century way of looking at banking. And so that has given the banks in the US a little bit of additional space to deal with this. From a modality shift perspective, the biggest problem you've got is if we look all around the world, a person's bank account today is dominantly the phone. How are they getting that? They're getting that as part of sort of integrated into their operating system of the use of the mobile through a wallet architecture. Those wallet architectures differ, very varyingly across different geographies and so forth. But there are some commonalities, right? Is that the most popular wallets, the most traction are those that have their own value stores and have very low friction and interchange. And so that changes the model of banks in terms of the way they make money. Credit cards, which is a big earner for retail banking. Credit cards won't exist in 10 or 15 years because you'll just be able to get instantaneous credit. So banks aren't sort of trying to prop up these traditional branch products rather than saying, what's the utility a credit card provides and how do we do that through the digital layer? That's the biggest risk because, when you don't understand that it's about that sort of embedded experience of the utility of the bank, and you're trying to protect a product, you can be easily circumvented in this new world, especially when AI starts to come in.
Exactly. You mentioned financial inclusion a lot. I believe in the US, we still have 5% of people that are underbanked or unbanked. And, going across
And
to
it's a
places
lot
like,
higher, brother. It's 20% of
is it
households.
20%?
Yeah.
And going across to places like Africa, we've seen M-Pesa come in. What are your thoughts? Are we lowering this number? It doesn't sound like we're lowering this number of, the financial inclusion or those being introduced to the banking system. I know that was a big push with crypto, financial inclusion, bank the underbanked or unbanked. Are we reducing this number? And what's stopping us from reducing this number?
As we know, the problem isn't access to financial services because anyone can walk into a bank anywhere in the States and theoretically open a bank account. But the problem is that the cost of banking as a lower income household is extraordinarily expensive. And so that's why people avoid, that the bank fees, overdraft fees, and so forth are obviously punishing. But the other aspect is that it's also a KYC issue. If you look at financial inclusion, one of the biggest reasons for financial exclusion is people not being able to satisfy the identity or documentary requirements. It's only 40% of Americans that have a passport. We have about, 15% of the adult population doesn't have a driving license. So there are real roadblocks to identity verification. If you look at Indian market as an example, India tried from the 90s to put bank branches in these rural locations to try and kickstart financial inclusion for the poorer villages, throughout India. And it just failed because even if you had a branch, someone would walk in the branch, they can't meet the documentary requirements to open an account. So the two mechanisms we have for that is either you create, you make it accessibility to a government ID very, very straightforward and low pressure and very simple. And, you obviously lower the fees for people at that end of the segment. But the other element of this that we've seen, in terms of financial inclusion in places like Africa is having a type of bank account that requires very low identity requirements, just a single identity document. And then you may have some restrictions in terms of operations on that account, total amount of cash that you can store, the amount of transfers you can make each day. But, for lower income households, that's generally not an issue. So if we wanted to fix it in the United States, the first thing we'd have to do is essentially what we've done with prepaid cards, which are the most widely used instrument for those that are financially excluded in the US today, give them access to that same functionality through a basic mobile wallet or basic mobile app, with limited identity requirements, and certainly not needing to go into a branch and sign a piece of paper, right?
You think digital ID or decentralized ID? I know Circle was coming out with Verite. It looks like they backed off that project. But, some kind of attestation. You just have to provide your kind of KYC identity information once, and you can use it. And,
Sure.
if you're buying a car, it doesn't need all your ID to buy the car. They just need to attest this is the person buying the car, and they
Yeah.
provide certain amounts of information because we see what
Sure.
happens
Sure.
when there's honeypots of information. None of these organizations can keep it safe from hackers and predators. Do you think digital ID, I know FATF has kind of touched on this a little bit as well, that digital ID and decentralized ID, is that something that needs to be prioritized now?
Oh, absolutely. The pandemic taught us this. The
Yeah.
pandemic taught us that we are entering a period where we will be reliant on the digital service layer, whether it is digital healthcare, remote health, whether it is digital education, that in the 21st century, that if you want the best level of service and, want immediacy, you are going to have a digital service infrastructure, and digital service infrastructure requires a digital identity ecosystem, right? And banks should not be in the data of collecting KYC information. They should be only in the business of confirming your identity. And this is the problem we have today is if you move from one bank to another, you have to start the process entirely from scratch, giving them all of your information all over again, instead of just saying, why can't you query, the identity information I gave the previous bank? And so having a centralized, I think digital identity is national infrastructure for a smart economy of the
Yeah.
future. You could have a privatized system for that, but as we've seen with things like Venmo and other privatized, PayPal, P2P, you don't get broad 100% adoption from these privatized systems when it comes to infrastructure requirements. So, you are going to really need at some point, the government to step in and have that. I think you can have elements of self-sovereign control over identity. And I think that that's important to have that transparency control, such as what we've seen in Europe with, you being able to tell an organization that they need to forget your details and things like that.
Yeah.
I think that is part of it. But I don't think you can have a 21st century economy based on paper identity documents. I think that those two ideas are not compatible.
And talk a little bit about moving, because you have to deal with these kind of regulatory
Yeah.
requirements and challenges. First of all, why start in the US with something like Move, which seems like one of the strictest places? Was it one of those things, start in the hardest place and then it should be easier everywhere else? And then how did you show the regulators that, hey, non face to face onboarding is the way of the future? We can do it with less fraud than in the traditional kind of financial institutions.
Yeah, well, I can talk about some of that, but I will say why the US. The immediate reason was that at the time, with the success of social media and so forth in 2010, 2011, there was generally people were expecting that you could do the same in terms of retail commerce, super apps. Uber was coming out. Amazon was on fire. So people were thinking, why can't we do this with healthcare? Why can't we do this with banking? Who's going to be the Facebook of banking? And so there was an opportunity to raise funding off of that. And also, there's a bit of, if you can make it in, we based out of New York. If you can make it in New York, you can make it anywhere. But, New York was the financial capital of the world. So we wanted to prove it was possible. We were just too early. We were a few years too early. If you look at a lot of the design patterns we created, we were the first mobile app in the world to offer you the ability to sign up for a debit card in the app. Now, as you rightly pointed out, the regulators wanted us to get a wet signature back in those days. That was still the dominant view. So we had to prove that our identity verification process was as robust as someone walking into the branch. And I can't talk about in detail exactly how we proved that because it involves the bank partner that we had at the time. But just suffice to say that we were able to show that there was a much higher abuse of synthetic identities in branch than there was through our online identity verification process. And that was what enabled us to get the initial tests that the regulator would allow us to bring on a certain number of customers. And then after, we had successfully had the first 5,000, then the next 5,000, the next 10,000 and so forth like that until they were comfortable with it. But, we created a lot of design patterns that are still in use by challenger banks today. We were the first mobile banking app in the world that didn't have a list of accounts on the homepage when you fired up the banking app, we had this thing we called the spending meter, which was an artifact that showed you how much money you'd spent, a circular artifact on the homepage, and the app would turn red if you were spending above your typical spending, or the app would turn green if you were spending below your typical spending. That sort of circular artifact to show you your money use is now very common amongst the neos. That became a design pattern. Our real-time receipting, capability with instant categorization of your spend. You see that in mobile wallets like Apple Pay and others now. So, we really pioneered a lot of, those features of sort of mobile banks. So I feel like we made a big contribution to that movement as a whole.
Why aren't banks adopting this technology more and kind of using you as the guinea pig and saying, hey, this is something that we can move towards? I believe in a talk you talked about either Alipay or, WeChat Pay. I'm not sure exactly which one had been less than 1% worth of fraud, where,
It's much
traditional
less.
banks in
Yeah.
North America, it has to be way more than that. Fraud has been plaguing organizations. Anyone touching any kind of e-commerce or financial services have been plagued by fraud. Why aren't we adopting more of what's being used in Asia, what you've seen for almost decades? And we're still kind of at the same point where they want people to come into the branch.
No, I mean, if you are listening to this and you're in the States right now, I'm going to give you some truth that's a bit shocking, and that is that if you are using a Chinese mobile wallet in China or elsewhere, Alipay is in 130 countries now. If you're using that wallet, you are 10,000 times less likely to suffer from fraud compared with using a credit card online in the United States. And I'll give you the hard numbers. The fraud rates for Alipay at their peak, which is generally during Singles Day, November 11th. We don't have the numbers on, well, we do have the numbers on Singles Day in terms of that. We don't have the Alipay transaction numbers right now, but it's sure to be over 500,000 transactions per second, which is about 10 times the combined power of all the card schemes right now. And they get 0.0006 basis points of fraud compared with 11.2 basis points of fraud for card not present in the United States. Now, why is that? The reality is you can't secure a credit card number anymore. I mean, that's the reality. You can tokenize and that gives you some protection, but the your 16-digit credit card number is no longer secure really. And there's other elements to this as well. The push feature versus pull, so, right now the card schemes have a pull mechanism where they authorize from the bank. And the only authorization is this card is requested to make a transaction. Is there enough money in the account to support this transaction? Secondarily, we now have some fraud systems coming in that are behaviorally based and things like that. Whereas on the mobile wallets like Alipay, it's a push system. So even if you are transacting with a merchant, you have to confirm the transaction in the app yourself. So it's not the bank confirm or authorizing the transaction. It's the card owner or the account owner rather, confirming the transaction. But the biggest element is undoubtedly the fact that, Alipay uses digital identity. It uses biometric identity mechanisms. You have a number of those. You have a fingerprint or voice recognition to get into the app. You use facial recognition for identity verification. This, facial recognition system is broadly in use in China. It gets a lot of grief over that in the States because of civil rights, but the reality is that that stuff works. The identity, and it's a new tech stack. They have new rails, new tech stack built from the ground up, and they're not sort of trying to retrofit new mechanisms of fraud control and so forth on an older tech stack. So there's a number of reasons, but they're the main ones.
That's what I was going to ask you about is, what are your thoughts about China? And now we're seeing a lot emerging out of India being the new leader. We're seeing BRICS come out, the de-dollarization of the US dollar, the move away from the US dollar, the move away from US being a powerhouse. I think globally now, from the last 20 years, we've always seen as US people looking towards the US to be kind of like be the mover and shaker amongst the world. And we're now seeing that kind of move away where people are kind
Yeah.
of, protesting the US every chance they get. What are your thoughts? And then what's the downside of that where the US, who maybe has a little bit more about consumer protection and human rights, a little bit more than the rest of those countries that are emerging. Do you have any thoughts about that?
Well, I mean, you have all the human rights you want in the US unless you're poor, you know. And then, access to healthcare and education and so forth is obviously a struggle. So, I look, I think ideologically the US has some real issues in terms of its identity right now. We're going through a lot of, policy and politics around that in terms of, and there's a big effort right now for the US not to make these progressive moves in terms of policy and so forth as quickly as possible. Unfortunately, that sort of translates in the business arena and so forth, particularly when it comes to things like banking and also the way the government system works today, which is essentially bought and sold for by corporations who, have the lobbying groups that can pay for laws to be shaped according to their criteria and so forth. That all of that is part of the complexity of the system here. Ironically, you have, Silicon Valley, which is a massive engine of innovation, but that innovation has to be put within the culture that's in the US. Whereas if you look elsewhere around the world, particularly in respect to things like payments and the growth of these fintechs, it's clear China is 10 years ahead of the US on things like central bank digital currencies, real-time payments, and reform of the banking sector as a whole. Even with the tech clampdown that they've had in China, they're still making tremendous progress on those fronts. It the biggest answer I get to that when I talk with American CEOs of banks about that is, yeah, but that's communism. Like, well, it's not really, it's technology.
Yeah.
And so if you look at PixPay in Brazil or look at Paytm in India, the same is true of that. So everywhere else in the world is sort of making this move towards these real-time financial systems, low friction, highly accessible, integrated financial services. And the US is still saying you need to go to a bank and sign a piece of paper. That's essentially where we're at. So the US will have to change. The question will be whether that change is forced upon them because of the way cross-border trading and smart contracts and AI will be implemented from a commerce perspective, or whether, they have that come to Jesus technology moment and see that these are the building blocks of a modern, 21st century economy. I'm not sure what will be the catalyst, but right now the US is just continuing to fall further behind.
Can you talk a little bit about, you talked about some of these progressive countries. You mentioned Brazil, India. We just saw, this week, Argentinian president talking about removing the central banks. And it seems like he's pro Bitcoin, as well as the El Salvador president creating or allowing Bitcoin to be legal tender. What are your thoughts about Bitcoin as legal tender? It seems like there was a lot of hype there. I don't see or hear much usage. It seems like the El Salvadors have maybe bigger problems to worry about than using their wallet. It seems like kind of if they
Sure.
want that money, they have to use the wallet. But I don't hear as much usage after the fact. What are your thoughts about Bitcoin being considered legal tendered around the world?
I mean, Bitcoin as digital money was always, I think, if you read the, 2008 Satoshi white paper, was always the stated goal. But, Bitcoin is more than digital money. It's payments as a payments network, the blockchain concept and so forth, built into that. The biggest problem is with the limited amount of Bitcoins that will be created and in circulation, this has created speculation around the future value of Bitcoin. So it has very low utility as a currency in terms of allowing people to pay for stuff, because people don't want to spend it because they want to speculate on the future value of Bitcoin. So the only way Bitcoin could really compete with, say, the US dollar as a currency would be to drop that constraint. It would be for people not to consider it an asset class or a speculative instrument anymore, and to see it as a currency that can be spent. And that is a design flaw within Bitcoin. There are other, digital currencies that, do better with that. But, and in terms of Bitcoin becoming, some sort of digital reserve currency, that's the problem that Bitcoin would have to solve. And I'm not quite sure how, that would happen with the community and so forth. So I don't know if Bitcoin is the solution. I'm not sure that central bank digital currencies hold all of the solution as well. I think the ultimate way this goes is that the more and more automation we put in place, the likelihood is that AIs will come up with better value exchange mechanisms that we haven't necessarily thought of. And that'll start with cross-border trade, and then, evolve into sort of retail. So I think that AIs will help us create better forms of digital money or intelligent money, moving forward. That's what we've seen happening in medicine and other areas right now where AIs can sort of fill in the gaps there. So but I do think central bank digital currencies will be absolutely necessary for cross-border trade and smart contracts. And I want to make clear that if you want to have a smart economy competing based on the level of autonomy that you have, you can't use smart contracts with US dollars. It doesn't work because US dollars aren't programmable. They can't be rolled back. They don't have the auditability of digital currencies, all of those sorts of things. You would need to create such a big layer of technology around the US dollar to make it machine readable that it's no longer the US dollar. It's now a central bank digital currency. And this is what a lot of people don't really understand, is that you can't use fiat currencies on machine readable, trade and commerce, which is smart contracts. It just doesn't work.
You touched on two things there, AI and blockchain. You have probably thousands of hours of content. Do you think going forward, blockchain, especially with what we've seen in the war and the propaganda and using the media outlets to tell a story, do you think the blockchain will be needed for provenance? Otherwise, AI can have you saying you're for this side, that side. They have hours of your content to pull from. They could probably nail your voice and even your
Sure.
image exactly. And as someone that has a media arm to your company, are you worried about that as a futurist? Do you think that, the blockchain is the answer to solve for some of the maybe AI deep fakes that we're going to be seeing come out over the next couple of years? We're already seeing how important it is
Yeah.
for seeing things like the wars that are happening around the world.
Ironically, I think digital identity is part of that solution, because I could attach a digital identity signature or watermark to my content, and it would be very difficult for someone to attach my identity without my authorization to content. So I think digital identity is part of probably a better solution than blockchain. Having said that, I think we are, entering a period of radical transparency where, if you look at the news cycles, you look at the fake news and all of this, we are coming to an informational crisis where we won't be able to trust anything unless we fix this problem. So the solution to that is a form of radical transparency or clearly definable truths in certain areas. And this is when it comes to factual assertions rather than opinions, obviously. And right now we're confused between facts and opinions in many areas. But I do think that we will need some form of truth to emerge in terms of just pure data. And I think the world is pushing towards that. I also think our kids, when they're setting policy in the 2030s, I think they're going to have a very different view of the system, that'll be much more collectively oriented, that the system needs to fix problems for everybody, not just for a small group of elite, powerful people who control the purse strings, and I think that's going to result in some radically different policy where, information and policy becomes a lot more inclusive, particularly because of the effect of climate change, and disrupting people's lives around the world. We're expecting by 2050 up to 1.6, 1.8 billion eco refugees displaced by climate. in terms of AI, technology based unemployment and so forth, requires much more socially oriented policy. So that's really from a long-term sort of futurist view, what will be the underlying driver of changes around things like transparency. That it's like, all right, you don't get to have this level of inequality, poverty, and restrictions on cost of access to healthcare and so forth, while you have this incredible wealth being amassed by billionaires and so forth. That we already see that messaging coming out today. That the purpose of the economy, first and foremost, should be to look after the basic needs of citizens. After that, the market can do its thing. But if the economy can't provide for the basic needs of its citizens, make sure you're housed, clothed, fed, have access to healthcare and so forth, then ultimately, could you argue the economy is successful?
You talk a lot about basic income. What I think is interesting is because there seems to be a push for people not to want to do or be as ambitious as before. Even we saw in Canada during the pandemic, we had something called CERB, where everyone was getting $2,000, which a month, which is a lot for people that are maybe working as a waitress or in other professions where they have to work long hours to probably make the same amount of money, which led to a huge issue where it's tough to find workers these days in Canada and probably other places around the world. Don't you think basic income or the implementation of a basic universal income would kind of further drive us down the road of, lack of ambition and maybe lack of innovation that we're seeing bright minds like yourself come up with?
Yeah, actually, exactly the opposite is true. There's been at least 75 UBI trials around the world. And what we know from those UBI trials is quite amazing, actually, is that, suicide rates decline, depression and mental health issues decline. And here's a direct answer to your proposition. People receiving UBI start their own businesses at 300% the rate of the general population. So there is just no evidence to suggest that people are uninspired, that sit on the couch all day and don't do any work when they receive UBI. People want to work. So what we find with UBI is they either create their own businesses at a much higher rate than the general population, or they get involved in community activities at a much higher rate than the general population. But in terms, of you're saying, how do we get, people to participate in the economy when you're paying them UBI? UBI will be a response to technology-based unemployment created by automation, and that's since 1960, when we've been talking about robotics and artificial intelligence, the market or industry has been very clear that the number one purpose of AI, and we used to call it a labor-saving device, robots and AI, is to remove human capital or human labor from the workforce. That has always been the intent of AI. The thinking being that with AI, we can live life of leisure because AI can do all this stuff for us. So we need, if you want people to stay, if you want to keep the capitalist system, you need people to consume. How do people consume if you don't get paid a salary, right? If you don't have wealth distribution through employment? Well, you need a UBI. That's why you hear Elon Musk and Bill Gates and Mark Zuckerberg and all of these guys talk about UBI as the solution because they know what's coming. They know that technology and employment from AI is a side effect of the market pushing very, very hard to create artificial intelligence and this level of automation in the economy. Alternatively, you have civil unrest, social collapse, and revolution, because if you have 40% youth unemployment and you're not offering any solution to that, then crime rates go up and social unrest goes up. So you really only got two choices. If the market is not going to stop implementing AI and tech, so therefore the market is going to produce this effect. So you either have a breakdown in society, or you have UBI, or you come up with a new system that isn't capitalism. But that's unlikely in the short term.
And we're seeing a lot of the breakdown in society right now with a lot of unemployment, not a lot of
Right.
hope. And as you said, not a lot of solutions coming from the government. I'd love to take the end of these shows to kind of talk about you, your personal, what you're working on. I see you're working on the Futurists, which is honestly, that website is a thing of beauty. Was that your thought? Was just to create like AI generated art, just a visual masterpiece?
Yeah, we
Because
wanted to demonstrate, generative AI, sort of as part of the platform. But, the Futurist is just about really creating a collection of people around the world that are focused on the future and trying to take us into the future and giving them a platform for that. I've got 3 recordings over the next 2 days for Futurists that we have in the can. So I would say the other element, in terms of what I'm continuing obviously to work in the banking space. I've got a new book that's coming out hopefully in April called Branch Today, Gone Tomorrow, which is looking at the fact that we reached peak branch before the pandemic, actually around 2017 globally. And that's the first time in 500 years that we have seen globally the numbers of branches decline, and they're declining quite rapidly now. And so the conclusion of this, which is a really interesting conclusion, and then certainly going to be interesting to see the reaction to this in the States, is that if you think branches are still your primary channel, then you are going out of business. Digital must be primacy from this point forward, which means if you do have branches, their primary role is to support digital, not the other way around. And if you can't get your head around that, then you're going to be giving up market share to digital players. So, this is really helping CEOs of banks and credit unions and so forth really understand that this is a pivot. It has fundamentally changed, and these are the things you can do to guarantee you still have some relevance.
And I think we only get more digital, right? We never go backwards. There
Right,
are some
right.
people that say, "Hey, I want to put on the overalls and go nail in the fence and feel like I'm doing something with my
No, but
hands."
I
But
get,
that's
I
never going to
get,
be the overall society. And we're only going to
no,
get more digital.
no, I get asked this all the time, but couldn't there be a scenario which people come back to the branch? And I was like, you know what? Yeah, sure, sure. Some people go back to a vinyl record store now, but how do people buy their music? Well,
Yeah.
most people buy their music digitally. So if you are waiting for some sort of renaissance for people to come back to the branch to save your business, I'm sorry, you're screwed, right? By the time that does maybe eventually happen in some way, you know, artisan-based banking or something we could call it, at that point you're already out of business. So if you're hoping against all hope that technology is not going to disrupt your business and you'll still be able to do what you have done always, then I'm afraid you've already lost.
I think as a former DJ, I think what people fail to realize is the DJ, going to get a vinyl record at the store was fun. Nobody talks about the bank is not a
Right.
fun. It's like
Well,
saying,
this
"Hey,
is
wouldn't you want to go to an airport?" Yeah, if you
right.
remove all the stress, the
Yeah.
pressure, and the security agents patting me down over a stick of gum and yelling at me to throw out my water. Like the bank has never been a place that people enjoyed going to in the first place. So I don't see
Well,
us going back to that.
this was my argument when there was this whole future of branch Apple Store thing. People camp outside of Apple stores. If we could just make our branches look like Apple stores, they're going to camp outside of the branch as well. And the reality is, no, they're not camping out because of the Apple Store. They're camping out because of the products that are inside the Apple Store, namely the iPhone. And no bank products are anything like an iPhone. They're all virtual. They don't require a store to be sold. And we know that because all of the fastest growing financial institutions in the world don't have branches, don't have stores. So this is not a design problem. You can't design people back into the branch. This is a behavioral shift. The only way you're going to get people back in the branch is ban smartphones. That's not going to happen, right?
Not anytime soon. You might be able to attack TikTok. Last question for you, Brett. You're at the pinnacle of, I'd say, your career. You're just continue to put out books, thought leadership. You're in media. What drives you? You kind of, get to travel all over the world. What kind of sits like when you sit back and say, "Hey, I've achieved so much." What motivates you to keep on going? Is it like, hey, like playing out this theory across 20 years, 30 years, 4 years? What are your thoughts on when someone asks you what motivates you? What is the first thing that comes to your mind?
I mean, for me, I just want to make a dent in the world. I just want to make the world a better place. And part of my unique skill set that I've developed over the last couple of decades is that I can communicate the complexity of these disruptions and changes in quite simple terms. So if that helps people get comfortable with change overall and, and focus more on adaptation than defending the status quo, I think that will make people's lives easier. But also, there are some big challenges coming. We have to be prepared to talk about this. The more we debate things like climate change, whether it's real or whatever, instead of getting on with actually adapting, to higher temperatures and sea level rise and food scarcity and so forth, the better off the survivability of the human race will be. But we need to take collective action. Ultimately, my message is about this, is that, we can solve any problem that comes up, for the species, but only if we work together.
Brett King, the futurist of all futurists. Thank you so much for your time. My inaugural episode.
Thanks, Dave.
If I thought about this 6 years ago, I'd be laughing right now. Thank you so much for your time. And I
You're
can't
welcome,
wait to
brother.
get this episode posted. Thanks so much.
Take care.